Good afternoon, everyone. Let's take a moment to recap the current situation. Today, as everyone knows, it's a holiday in the United States. Well, tomorrow will be quite an important day because we'll have the non-farm payroll data and, of course, the quarterly expiration of all options and futures and so on. So, in short, it's quite a strange week, really marked by all these events. The Fed, which last night left the rates unchanged, and this, let's say, and afterwards, the Fed chairman Powell, in the press conference, warned that economic uncertainty and the risk of inflation caused by tariffs have unfortunately posed new challenges to the central bank's efforts to ease monetary policy. So stocks basically closed unchanged after they had hinted at a rise, okay? And the SP closed just below 6,000 points, basically. As for treasury bonds, it seems they almost reversed course after a 7 basis point drop, while the dollar remained largely unchanged. Fed officials, however, kept interest rates unchanged because even though they have planned two cuts in 2025, they have lowered their estimates for economic growth this year, while at the same time raising their forecast for unemployment and inflation. Powell also noted that the increases in tariffs will probably push prices higher, and that the effects on inflation could be more drawn out than he had anticipated. So let's say that from a macroeconomic perspective, the situation isn't exactly rosy because inflation still doesn't seem to be cooling off and the economy is showing signs of slowing down. So in short, the situation is a bit, let's say, a bit confusing. On the other hand, there's the issue with Iran. Today's news is that Iran probably wants a meeting with Trump, but it's still not really clear what the situation is. So the geopolitical and macroeconomic situation continues to remain quite, let's say, confused and not very favorable for an upward trend in the markets. That said, we know that in the end, markets do whatever they want, meaning they might even price in things that we don't know about. So at the moment, this is the situation. Now, let's move on and analyze what's happening from a charting perspective. From a graphical standpoint, as we can see, the situation remains quite, let's say, in line with what we observed yesterday, in the analysis we did yesterday. And we can see that there is, let's say, an attempt now to protect the 6,000 area, because you can see that little by little, the areas we had identified, 6,083 first, then 6,051, then 6,030, well, the market has gradually taken them all out and absorbed them all. So now, what is it that, let's say, what is my concern, let's say, from the long side? You can see how the distribution is absolutely unbalanced. We have a POC that is, we have a clear step, a very, very obvious one. So what could scenario one be? Scenario one is that this imbalance could continue and the market could drop down to around 5,967, whereas you can see it would more or less rebalance the situation. So this is the scenario, let's say, one of the possible scenarios. What is the other possible scenario? The other possible scenario is that given this whole area of low volume, the market could come back up and perhaps establish the POC in the middle of the distribution here during tomorrow's session. So today, with the markets closed, it's not at all clear what the market will want to do. Pay close attention, because if the area gives way at this low volume node at 6,560 definitively, it will then be very likely that the next target will be the 5,967 area. Also, let's remember that, as you can see, the entire distribution is right here. And if the price manages to reach 5,967, below that, we have a whole area that's, let's say, unbalanced. So at that point, the price might not stop at the 5,967 area, but could continue down to the 5,907 area. So be very, very careful. On the other hand, as we saw, let's say in yesterday's analysis, the price is forming this distribution, and right now it's trying to hold the upper part, let's say, of this distribution area. But if it were to break through this area, it would probably move to the lower part and would likely start distributing in order to rebalance this section of the composite volume profile. As for the Nasdaq, the situation is more or less similar, let's say, because essentially nothing changes. And we can see here as well that even though there's a bit less imbalance, a little less imbalance compared to before, even here you can see that the situation is the same. The same thing applies, let's say, from the perspective of the weekly bar as well. You can see that at the moment there's an inside bar. Until we break this low, we have a lower high and a lower low, okay? And a higher low compared to the previous low. So we are currently seeing an inside bar, which makes it even more important that the level we highlighted earlier on the SP, like 4170.90 and 4170.80 on the Nasdaq, does not get broken, precisely to maintain this so-called reflection bar within the previous bar, which had already shown higher lows and higher highs. If we were to break the previous low, then the problem would start to become more apparent, and the market would begin to make lower highs and lower lows, signaling a reversal in price action. So pay close attention. This level is not only important from a volume perspective, but it's also crucial that the 21.680, 21.5 level is held in order to avoid reversing the price action even on a weekly basis. One last thing we need to pay attention to is the rejection we saw yesterday at the 670 area on the SP. Yesterday, after an opening that was absolutely strong on the upside, the market pulled back, and as you can see here, there were two instances where we had attempt 7 without much volume with a very significant responsive short reaction. You can see the little red triangles here on the deckline, which signal the strong bearish impulse. The previous lows where there was an attempt to recover them, but as you can see, about half an hour before the close, the market started to push strongly to the downside again, and today we are continuing yesterday's trend. So be careful, because let's say on the intraday level we have signals indicating that the market has tried to recover the highs, especially yesterday after the rate data and the Fed President's press conference. But several times the highs at 670 were rejected, and the response that followed was a fairly significant short response, as we can see from the double triangles that appeared on our chart, which indicate aggressive short delta pushes. Well, with that said, all that's left is for me to wish you a good day. So once again, be very careful. Tomorrow we have the non-farm payrolls and the expiration of all the options. So pay close attention to what the market is telling us, because losing this 6,500 area level on the SP could lead to a drop of at least 1 to 1.5%. I almost forgot to mention something. I think it's unlikely we'll get there, but be careful, because there's still a significant open gap between the 5,800 area and 5,745. Here it is. So be very mindful of this situation as well. All right, all that's left for me to do is wish you a good day and see you soon.